Welcome to the Fear and Greed Afternoon Market Report for Wednesday, the 28th of July, 2021, where in just a few minutes I tell you everything you need to know about what's happened in financial markets and the world of economics today. I'm Sean Aylmer. After hitting a record high yesterday, the S&P ASX 200 fell 0.7% today to close at 7,379 points. Most sectors across the bourse were lower, led down by technology and energy stocks. The financial and materials indexes, which had done well, also fell today. In fact, the only sub-index to rise was the real estate index. It came as inflation figures showed that prices jumped 0.8% during the June quarter, taking the annual inflation rate to 3.8%. The surge in the headline rate reflected higher petrol prices and a jump in childcare costs, mostly because childcare was free a year ago when the pandemic was in full swing. Underlying inflation, that's the one that the Reserve Bank really worries about, was closer to 1.6%, still well below the central bank's target range. The other piece of macro news today was the federal government's decision to up the size of payments to eligible businesses in the Sydney area. The lockdown in the city was today extended for another 4 weeks after 177 new cases of community-transmitted COVID-19. On the market, there was a sea of red among the large caps, led by BHP, Wesfarmers, Afterpay and Commonwealth Bank. The worst performer was Nickel Mines, down 11%. Redbubble and Netwealth Group both fell 6.7%. The biggest corporate news, though, came after the market had closed. Rio Tinto said it will return $9.1 billion to shareholders after the best 6 months in the miner's history. The group reported underlying earnings of $12.2 billion for the first 6 months of the year, and 2021 is likely to be the best year ever. The consortium involving the Ontario Teachers Pension Plan Board and private equity group KKR upped its bid for Spark Infrastructure by 8%. The board of Spark has opened the doors to due diligence, happy to consider the $5.2 billion offer, why wouldn't you? And that was enough to trigger a 5.4% jump in the group's share price. And the new car market has rebounded strongly, and car dealer AP Eagers said sales were up 21% in the first 6 months of this year. Its underlying profit, pre-tax, was $219 million versus just $40 million a year earlier in the middle of the lockdown. Just recapping Wall Street, the S&P 500 ended this morning down 0.5%, the Dow Jones Industrial Average was off 0.2%, and the Nasdaq closed 1.1% lower. It could have been a lot worse, but for a rebound later in the day. After the market had closed, Microsoft, Apple and Alphabet, parent of Google, all announced better than forecast quarterly results. That's it for the afternoon market report for Wednesday, the 28th of July, 2021. Join me tomorrow morning for the Thursday edition of the Fear and Greed Business Headlines. I'm Sean Aylmer. Enjoy your evening.